Netflix has announced that after the closing bell on November 14th, the company will have a 10-for-1 split, which means that every investor who owns one share on November 10th, which is called the date of record, will instead automatically own 10. But each share will be worth 1/10, 10%, as much. A stock split doesn't make a company fundamentally more valuable. It just slices the same pie into more pieces. Nonetheless, stock splits often do result in short-term abnormal returns, with companies seeing an average 2 to 4% increase in total value around the split announcement. This is a phenomenon that researchers call the announcement premium. And here are the psychological elements to all this. Academics studying the field of behavioral finance have tried to explain why this happens. And here are a couple of the reasons. One is anchoring bias. Investors might anchor their perceptions of a company to the pre-split price, so the post-split one feels cheaper, even though it isn't. There's something called gambling preferences. The lower post-split price can make the shares feel more like a lottery ticket to some investors, so they may feel they have more upside potential owning 100 shares at $10 each than one share at $1,000, again, even though the total investment is the same. And some investors associate stock splits just with successful companies. After all, their stocks are split because the price has grown really high. Nvidia, as an example, has split its stock 6 times since its IPO in 1999. Now, none of this is rational. There is, though, one practical reason for doing this that makes sense. Netflix said the reason is because it needs to reset the share price to, quote, a range that will be more accessible to employees who participate in the company's stock option program. Now, stock option programs often require employees to pay out cash to get their hands on shares, even if that transaction means they ultimately profit from doing it. Buying fractions of shares or exercising fractions of options may not be possible in these programs, even if fractional share trading is otherwise now widespread. So a split that gets that share price down is, in fact, helpful to employees in that case.